Out of the pan and into the fire, or between a rock and a hard place. We can take our pick of phrases to describe the situation that Indian startups have found themselves in 2023. Now, 2022 was all about the fears of the funding winter setting in. This year has been about the survival of the fittest. Funding for Indian startups has slumped to a 5-year low in 2023, over a 70% drop down. The IC reached to about $7 billion as compared to $25 billion in 2022, this as per data from Traction. In fact, Q3 of 2023 was also the worst that we've seen in 5 years. Now, through the year, the froth of the last few years came bubbling up, bringing the impurities to the surface. Lapses in corporate governance, financial misreporting and irregularities, talk of internal audits and markdowns in valuations and slump in sales. Add to it a regulatory crackdown, especially in online gaming and digital lending. The freezing over was nearly complete, but as those hacking health for longevity will tell you, ice baths or cold showers help fight infection and boost immunity, and the ice seems to be thawing. Early November, Mamaearth went public, the first unicorn to do so in 18 months, and marked positive response from its early investors. We also celebrated a decade of the mega e-commerce festive season sales with record GMVs. And to the streets relief, listed new age tech companies have hunkered down and demonstrated a turnaround and have delivered on profitability, so have several unicorns. As we step into 2024, there is hope that we will send more startups to the Dalal Street. Ola Electric, Oyo, Pine Labs and Swiggy are set to be readying their papers. Not just that, over $20 billion worth of venture capital dry powder that was raised over the last 2 years is ripe for investment. And last but not the least, in the age of future technologies, we're likely to see continued interest in AI, deep tech, space tech and climate tech, with smaller, more focused VC firms entering the investment landscape. Hello and welcome to Young Turks, India's longest running show on startups and entrepreneurship. I'm Shireen Bhan. Joining me today for this special show, two gentlemen who've been the most active investors in 2023 and have also mentored young entrepreneurs as they build resilient businesses. Rajan Anandan, Managing Partner at Peak 15, and Nitin Kamath, Founder and CEO of Zerodha and Rain Matter. Gentlemen, appreciate you joining us here on Young Turks, and thanks very much for your time. Rajan, let me start by talking to you about how you would sum up and describe 2023, not just for the startup ecosystem, but even for you, because it saw the birth of Peak 15 separating from Sequoia. How would you sum up 2023?
You know, I think, Shireen, 2023 has been a terrific year of transition. Right? It's been a year of transition into profitability. It's been a year of transition into IPOs that are actually well priced. And for us, it's been a transition from Sequoia Capital India and Southeast Asia to Peak 15. So it's been a year of transition. And I must say, as we sit here in December, ending the year, it's a year that we feel very good about. And I think in your summary, I got a little worried looking at the first 4 or 5 statements about 2023, but towards the second half of it, I felt that was actually accurately representing, I think, a good balanced year in terms of the good things that have been happening.
Absolutely. It has been a mixed bag, and there is plenty to be hopeful of and feel optimistic about as well. But Nitin, how would you sum up 2023? It's a year of transition for Rajan, of course, on what happened with Sequoia and their move towards Peak 15, but also to his point on the move towards profitability, as well as a move to better priced IPOs. 2023 for you, Nitin.
Yeah, I mean, exactly what you just said. Because one of the concerns that we've had was that, which is it seemed like a bubble at some point, and that has like we were wondering how bad it could be if that bubble burst, but it isn't as bad as what it potentially could have been. As in, it's awesome to see so many so many of these businesses on the path to profitability. And while we are in a spot right now with the new money not really coming in at the same tick as it was some time back, but I think that'll correct. And it'll be back up given the success of the recent IPOs and the fact that there is an opportunity to come list on the exchanges, which I think people didn't factor in a few years back, that that Indian tech startups can actually list on Indian markets and raise money so easily.
So it's been better than what was expected. 2023 didn't turn out to be as bad as one feared. That's Nitin Kamat's take on the year gone by. But Rajan, let me come back to you and pick up on what we heard there from Nitin, that there are plenty of opportunities that should excite investors like yourself. Now, when we spoke, which was a couple of months ago, you talked about the dry powder, not just Peak 15 is sitting on, but a lot of VC funds at this point in time are sitting on. Now, you know, the funding winter we've spoken enough on and enough about. Is spring in the air?
So I think, Shireen, if you look at this year, right, if you look at the venture capital industry, there's sort of three broad stages, right, in the private markets. There's a seed stage market, so you're just starting up, you're raising, you know, whether it's 3 crores or 5 crores or 10 crores or 15 crores, that's a seed stage market. Then there's a venture market, so you're raising, you know, call it 30 to maybe 80 crores or something like that. And there's a growth market, which is you're raising over 100 crores. I think what we've seen this year is the seed market is very active, Shireen, right? So, you know, you and I chatted about the most recent cohort of Surge that we launched. You know, it's really never been a better, more vibrant period for the ecosystem in India, and we can talk about that. And across all firms, I think we are very active at seed stage, which are new companies that are up and running, right? And then if you go to the next stage, which is call it the venture market, especially the Series A market, that's also quite active. It's not as active as it used to be, but it's actually quite active. Where we've seen the slowness is really in the growth market, right? So companies raising, call it above 15 million, 20 million, and certainly the 50 to 100 million rounds, those have been slow. And the reason they have been slower is for two reasons, right? One, I think the best companies in India raised an enormous amount of capital in 2021 and early 2022. So they still have, you know, lots and lots of runway. And actually, almost all of them are now either profitable or, you know, rapidly getting profitable. So one could argue that they may never raise again, right? The next time they raise may actually when they go public. So that's one. And second, the best companies raised a lot of capital, but they also raised at 2021 valuations, right? And today, growth investors across all firms are really looking for very high quality companies that they can invest in at quote unquote, you know, what are today's 2022 prices, right? And those companies have been far and few in between. So as we look at this year, I think it's important to look at it in this lens. Seed, very active, back to normal. The venture market, Series A market, you know, reasonably active. I think next year we'll see it getting back to normal. The growth market, which has been really where it's been slow, we think that's going to pick up steam, but it really will depend on, you know, high quality companies that come to market to fundraise at what are, you know, what next year will be at 2024 prices. So we think actually the market is a lot more active than what a lot of, because when you look at a headline number like 7 billion, those billions are normally driven, Shireen, by large late-stage financings, right? And that's actually where you've seen a lot of the slowdown. Whereas if you look at the early-stage seed market, it's actually very active today.
No, you're absolutely right. And thank you very much for adding the nuance to the headlines there, Rajan. And I agree with you that it has been an active year, particularly on the seed front. And Nitin, that's what I want to address with you as well, because 2023 has actually turned out to be the most active year for Rainmatter as well. So what's been exciting for you at this point in time? You know, over the last 7 years, you've invested over 450 crores across 80 different startups. As you look at your portfolio today, what excites you, and more importantly, what's going to drive the next set of investments?
Right. So, I mean, see, for us, the way we think about this investing is like an extension of what we're doing as a business. So it started in 2016 saying we need to partner with startups who are helping Indians do better with money. And you know, all the moonshots that we are not taking as their role, we wanted to kind of partner startups and to collaborate and do it. And so anyone helping in terms of, anyone helping do better with money. And then, then the question was, is wealth just about money? The thing was, maybe not, it's also health. And then we said, we also need to kind of, partner, collaborate with startups which are making it easier, for people to make healthier choices. And then when they talk about health, you can't, be in a place where the planet is not healthy. So anyone working on climate, and then so we, I think we need more entrepreneurs in this country. That's really like a large problem to solve, and that can happen only when there are good storytellers. So that extended into storytelling as well. So I think what is exciting this year is that I think all the expectations that founders set when they start businesses or when they raise money, I mean, that's come back to normal. And the problem, I think one of the big problems I had the industry was setting up unrealistic expectations, because when you set that unrealistic expectation while raising money, you kind of chase the wrong goals, and then you do a bunch of random things to get to those goals. So I think that has corrected, which is very exciting. So like I don't have people coming to me and saying, what, Nitin, there are 50 crore Indians who can invest in the capital markets anymore, which is happening in 2021, 22. So yeah, so I think that just the correction in that expectation, I think holds good for the entire industry.
And that's an important point that you make, and sometimes we don't appreciate this enough. And I want to delve a little deeper into this with both you as well as Rajan. Both of you talked about 2024 prices, and 2024 prices really reflecting the reality on the ground, reflecting, the change metrics in terms of expectations as well. Nitin, I'll start by talking to you. Whether we talk about climate tech, we talk about space tech, we talk about e-commerce or SaaS or fintech, with the current environment, with the regulatory changes that are happening, with the opportunity set that presents itself, I mean, what are the realistic metrics that we should consider at this point in time?
Yeah, no, I think this whole financialization of the country is like a big theme. I mean, we're seeing that happen like rapidly. So I think the challenge has been in finding different monetization models around this. So for example, for the population of the country, we just have, I think, 1,000+ advisors. Like as a country, I think we need like a lot more advisors if you want to help people do better with the money. So I think in finance, for example, around investment tech, if you could call this, what we're excited about is to figure ways to associate. You have 10 crore Indians who open Demat accounts, but what do they do then next with it, right? As in, because you let them on their own, they'll probably make mistakes, right? So you need platforms and people out there who can help them do better with money, and I think that's a really large opportunity, especially given where we are on the account aggregator framework, right? Because historically, the big challenge when you want to advise someone on money is, as soon as you ask the person a bunch of questions around his net worth, where his assets are, etc. This fellow would not answer. And if the person doesn't answer, how do you advise someone? Right? So now that you can do all of that with a click of a button with the account aggregator framework, so I think like a really large opportunity opens up there. On the health side, where I think this is again like a trend that we are seeing, which is people are getting more health conscious, and I think. As realization kicks in that life expectancy is only going to go up with medical progress. So one of the larger themes that we have here is that people will start caring about their health, both physical and mental. So we are doing a bunch of things around that. And I personally believe the first trillionaire on this planet will come from someone who is solving for climate problems. So, because, like what we've seen with COVID, right? When push comes to shove, humanity will make like large changes. And so yeah, with climate, there is no doubt, as in climate change is affecting humanity at a fast tick. And I think one of these years, we will all have to make drastic changes, and people who are solving for climate problems, I think will be able to stand out. So I mean, these are the three themes on which how we are thinking, and where the opportunity lies is what I think.
The first trillionaire could come from the climate tech space. That's Nitin Kamat's forecast here on Young Turks.